We had quite a day with silver, absolutely exploding in price. The question is what lies ahead for the precious metal, especially compared to gold? Well, let's try and find out as we explore. What a radical move we saw for silver's price today. I'm going to get into the numbers in a moment, but at times like this, when the prices spike up dramatically, is a time when I'm not buying. I'm going to hold out. I was going to thought about making a purchase today, but I decided not to do that. My friends at Summit Metals, they understand this concept too. They want you to buy smart, because only by doing that do you elevate your wealth. So check them out in the description below for their website to see the selection and the experience their great customer service for yourself, whether you're buying or selling. So here's the tale of the tape with the precious metals today. All green, all the way up, side down, and sideways. It's all up, not sideways, that's for sure, with the precious metal prices today. Gold is up 1.64% today, up $67.80 to $4,195.70. It did reach a high of $4,212.50 today. Yes, indeed, it's getting closer to that all-time high yet again. Silver was less than $1 away from its all-time high today. It is up now 3.93%. It is actually scaling back in late trading, moments before these markets close here, but it's still up over $2 now today, up $2.01 to $53.28. But here's where silver reached earlier in the day. $53.71. Amazing to see how far it had spiked up today. It's pretty amazing. Platinum and palladium also had notable moves today, with well over 1.8% for platinum and 1.47% for palladium. The gold to silver ratio has narrowed now to 78.87. Yes, indeed. It's wild to see this thing happen here. I'm going to be referencing a piece here from Adrian Ash about what's going on all around with the markets and with gold and silver in particular. We saw them jump up, slashing the safe haven precious metal value relative to its more industrially useful cousin to the lowest in a month, as the Federal Reserve signaled it's about to restart buying bonds to ensure ample liquidity, while global stock markets rose ahead of the U.S. politicians voting to end the record-long shutdown of the government. Stock markets opened higher, and European bourses hit new all-time records as the gold price in dollars rallied from $4,100 to a troy ounce to now above almost $4,200 yet again. It's crazy. And this is after New York Fed Chief John Williams said it will soon be time to begin the process of gradual purchases of assets to maintain an ample level of reserves to meet commercial bank demand and liquidity. So that's kind of the reaction what we're seeing here in the precious metal markets and now, but we also still have backwardation with silver, which is, I think, another reason why the prices have shot up. Now, the Fed Watch tool is actually pulled back in its likelihood that the Federal Reserve is going to lower rates a quarter point. It is now at 65.4%, whereas yesterday it was at 66.9%. So there's that change there. And so Stephen Moran, who is the Trump appointee and a White House economist, is going to be speaking at a meantime for federal. Raphael Bostic, meantime, announced that he will stand down from the Atlanta Federal Reserve at the end of his current term in February, opening another monetary policy spot to nominations from the White House. Silver had already shot higher, rising above $52 a troy ounce, also a new all-time high when first reached this time last month, before breaking $53 to trade 9.8% above last weekend's level. Of course, that cut the gold to silver ratio, as we mentioned. The gold to silver ratio so far in 2025 set its highest annual level ever outside of World War II, topping the level hit during the global economic recessions of 1991 and 2020 to average more than 90. In fact, we did see back in 2020, it got to 126 briefly. It's crazy. That's what we're looking at with silver. It's pretty amazing. And a lot of people are frustrated by that. But here we're starting to see it narrow now down, kind of justifying what many silver stackers have been wanting for a long time. And here we are indeed, enjoying the recent move in silver's price. But remember, what are we going to expect ahead? Well, I'm going to tell you, it's volatility. In other words, do not be surprised if we see silver prices move back down into the low 50s, measured in these dollars here, or maybe even in below 50 into the 49, 48 range. I would not be surprised if we see other tidbits of news that pop out that just radically moves it back down the other way. And don't expect gold to follow suit, by the way, at least by that much. It'll probably fall as well. But silver's going to probably be volatile for a while. I think we just need to get used to that. Silver seems to have regained its role as a bellwether or leading indicator for activity across the broader metals complex, according to the latest weekly note from Japanese conglomerate Mitsubishi's precious metals firm, like platinum, palladium, and copper, and has been added to the U.S. government's critical minerals list, underscoring its dual character as both an industrial and the speculative asset metal that tends to attract attention when the markets look unsettled. Meanwhile, Chinese solar manufacturers have reported strong demand in the photovoltaic sector, although continued efforts to reduce silver through substitution will likely limit the upside, but I think that's going to be relatively minimal too. Also, we have to remember that they overproduced back in 2023, so they're selling existing stocks of panels, I think, before more is going to. So that's going to be somewhat of a reprieve, but there's still a strong demand for silver in the photovoltaic sector. All of this suggests that silver prices may remain volatile and subject to sharp swings, but overall silver supply-demand fundamentals remain constructive, and for now the path of least resistance still appears to be, higher. India surging silver jewelry demand also has been exchanged. Traded products recover a remarkable year so far in 2025. According to a special analyst at Metals Focus, with strong investor interest in silver doubling India's share of global silver ETP holdings, that's exchange for physical holdings, to around 8% in September. So that's what we're looking at here with the complex here with silver. Multiple factors have fueled the demand, and while the pace of inflows may moderate as recent investor enthusiasm cools down, they are expected to remain robust throughout the coming year. Following last month's dramatic silver squeeze in London, heart of global bullion trading and storage, the London silver market has found increased liquidity over the past couple of weeks, according to bullion analyst Rona O'Connell at brokerage StoneX, as metal has been pouring in. I've heard it's been a record amount of it flowing into the LBMA vaults, with data from trade body the LBMA showing a record inflow of silver into London vaults across October that has reversed the post-April rise in New York warehouses stockpiles, spurred by ongoing fears that the Trump administration will impose U.S. import tariffs on the precious metal, which they're not going to do. Fears revived by last week's addition of silver to the critical minerals list. I think it's unfounded fear. I highly doubt he's going to do that. I would be shocked if that happened. But with private sector data reporting a drop in U.S. employment during October, voting to restart financing government agencies would mean paving the way to clear the fog that has fueled the U.S. economic uncertainty, according to Reuters. So we'll see how this plays out. London silver still remains tight, though, according to O'Connell at StoneX, noting that spot bullion versus the most active U.S. COMEX futures contract still show a backwardation. In fact, indeed it is. It's under 10 cents right now, but backwardation is still in effect. And London copper prices are rallying 2% from last Wednesday. And what's going on with the dollar? Well, let's see, because that is a factor we have to consider as well with regards to precious metals in general. But the dollar index is actually up now. It's up 0.07, modestly, still under 100, but it's at 99.51 right now. So we got a little bit of a strengthening dollar situation here, but we know in the long run, even though the dollar may be the strongest of all the currencies out there, it is weak compared to itself, day after day, month after month, year after year. What does that mean? That's inflation. It's worth less. So that's right. And but it is still the dominant currency out there. We buy our silver, we sell our silver for dollars or whatever other currency you have in your country. And that's what we're looking at here. So we're going to see how this plays out. But Fascinating indeed. It's been an amazing ride this week for silver. It's really surprised and shocked me to see silver move so rapidly and so quickly. And I think likely we're going to see some pullbacks and maybe dramatically in the coming days or week ahead. We'll see. And if that happens, do not be discouraged. We've been spoiled in 2025. Consolidation really, I don't think, has fully taken effect yet. I think consolidation for silver is somewhere in the low 40s range, 45 range, but we may not see it. I don't know. But if it happens, should we be discouraged? No, because we measure our wealth in ounces, not in dollars. That's right. That's what it means. When we hold on to our silver through the ups and downs, we have diamond fists. That's what it's about with holding silver. Yes, indeed. Diamond fist. Put that in the comment section down below. That's what we have here. That's what we're doing because we have power when we hold it. It's outside of the system. They can't manipulate it if it's in your hands. So let me know your thoughts in the comment section down below. Hope you found this video informative, insightful, and educational. And I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch and encourage you to please rate, share, comment, and subscribe.